for a few other people to also speak about various things going on in the Melon community right now. And quickly, before we do that, I want to introduce myself and a little bit about the current priorities of the council. So my name's Will. I'm the current chair of the Melon Technical Council. I'm also the CEO of Diversify, which is a highly scalable layer 2 exchange on Ethereum for trading several different assets, which recently launched. And the vice chair at the moment is Sari Turag, who works for Wharton, which is a market making firm, which is also helping with a few things with Melon. And that's on a rotating basis every 6 months. So we've both recently taken up those roles in the last few months, and we'll be continuing for a while till the next handover. Currently, so prioritizing 3 different areas, which is split with all the different members into 3 different working groups. The first of those being security and emergency procedures. If given various integrations that are involved with the relatively complex protocol, something goes wrong, how those are handled by council in terms of upgrades and all sorts of other scenarios. Second being protocol development. And there'll be an update on that in this call. And the last being the token model itself for the Melon token and how it interacts with the protocol. So the agenda today, following this introduction, will be to start off with an update from Mona about the network stats and the last period for the Melon protocol, followed by, at 10 past, an update on the user election process to the council. So right now it's purely composed of the technical council, but the idea is that actually some of the major users will be represented by someone who will also sit on this council to help shape the protocol going forward. After that will be an update on the protocol and what's scheduled to come in the next releases. And at 7:30 will be the kind of largest session, which will be talking about MIP7, which is a proposal brought forth by community members for how to improve the Melon tokenomics, and some really interesting suggestions, and there'll be a Q&A to go with that. And then at the end, there will be a Q&A on sort of any topic that wants to be raised by people who are on this call. Of course, this will all be filmed and recorded and then posted for anyone to watch from the wider community if they couldn't make this talk. And we'll aim to finish by 8 and keep it on track. So with that, I'll hand over to Mona to do the next session.
Hey guys, thanks for that intro, Will. So I'm just gonna quickly walk through some of the growth stats for Melon that we've seen in the last few months. I think it would probably be easiest if I do a screen share as well. So just give me 1 second. Can you guys see my screen?
Looks fine, Mona, yes.
Okay, cool. Yeah, so we've, as most of you know, we sort of went to mainnet in February 2019 and didn't see a whole lot of growth in the first year, not gonna lie. So when sort of Avantgarde Finance took over the lead developer role for the Melon protocol in October, we sat down and we thought about what was causing the lack of usage on the network. And the first problem we identified was basically it was just too hard to use. So we'd been very focused on the contracts, and the UX UI was just almost impossible to use. So our interface team basically rebuilt the entire interface to Melon from scratch, and you can now see that it's a browser-based version versus a desktop version. Huge performance improvements from where we were previously, and that was deployed around middle of February, which is why this slide focuses on the growth we saw since that point, because previously there wasn't much. And so I just wanted to highlight a few things. In terms of number of funds, obviously there was sort of a bit of pent-up demand before the new release because people had been trying to use it but struggling, and so we saw a really big jump in February. I always measure it from mid-month to mid-month because that's when the release occurred. In March to April, we saw a 10% increase in funds, and pretty much consistently 10%, and then a big jump last month with 17% growth in funds. Today, I think we're somewhere in the, I actually don't know by memory, but somewhere in the high 350s. And we're also seeing the number of investments pick up. So we're at 800, I think today, 880 investments. We started from a base of 394 in February 16th, so more than doubled. And we're seeing very strong growth there. But number of investments is one metric, and AUM is another, and I'm sure that will be a hot topic later when we discuss MIP. So currently AUM doesn't accrue value to the network, but I think Tom, Ceteris, and Chris will have things to say about that later. But we have also been seeing really strong AUM growth. I've measured it here in ETH terms, and we've seen the protocol grow from around 1,370 ETH in February to 4,400 marked at July 16th last year. In dollar terms, that's basically from about $250,000 to around $1.5 million today. So a 6x. So very, very exciting stuff in terms of growth stats. But even more exciting stuff to come, I think. A lot of our users or potential users are still on the sidelines waiting for feature requests, and we're working very, very hard to deliver those. Sean is going to talk a little bit about that later, but hopefully that will unblock a large portion of our users from the pipeline and basically enable them to get started and launch their products. So I think that's pretty much it. Happy to take any questions at the end, but that's it from the growth update. So I'll stop the screen share now, and I think we're on to Janos.
Janos, what's your name? I can't see you. Can you write it? Ah, okay, got it.
Hey, everyone. And yeah, thanks, Mona, for the update on the usage of the Melon protocol. So yeah, just to give an update on the sort of user representation of the Melon protocol, as many of you are aware that the Melon protocol, the Melon token itself, is like not a governance token. So the protocol is not governed by the token, but rather by like a council that was initially set in place, specifically the Melon Technical Council. But there was always the intention to include direct user representation into this council from the Melon exposed businesses. And I think over the last month or two, we started to reach out to people that might be interested in joining the council. As we saw like more and more funds launching on Melon and more serious amounts of assets being managed within the protocol. I think from the setup back then, it was intended to have for every 5 members of the MTC have 2 members directly representing users. So we're currently looking at getting applications and getting interest from people for 2 slots within the Melon Council. And yeah, it's basically just an update to say the applications are open. We are already in contact with some people that expressed interest. And this is really a call for more people to join and express their interest if they weren't aware yet. There is a Melon user fund manager Telegram group. I think it's called the Melon Cafe, which will eventually vote on the representation. So that will be the group that eventually decides who is going to represent the users in those 2 slots. But yeah, really anyone who's interested should reach out to us at team at meloncouncil.io, and the applications are currently open. I think we intend to finalize the applications during this month, so we can properly start with a whole council going into September. If anyone wants to read more about that, I think it's discussed in both the most recent blog posts. There's a blog post about the MIP7 and the next steps, and then also about the Melon DAO, the past, present, and future. So yeah, anyone who wants to review that should definitely take a look. In general, the criteria for that is people that are eligible to represent users in the Melon ecosystem should at least have around 1% of the assets in the Melon protocol, which I think should be around 10 to 15 funds that qualify at the moment. And then there's also the willingness to reveal that identity. But yeah, so anyone who's listening and who's interested should reach out to us. And I think the next session would be, yeah, Sean giving an update there.
Cool, perfect. Can you guys hear me? I'm going to assume yes. So I'm here today to, I'm the protocol lead for Avantgarde Finance and by proxy Melon Protocol. I'm here to give you guys a bit of an update about what we've been working on in recent months and what you can expect out of Melon V2, which is just around the corner in Q4. So there are a couple fundamental aspects that we wanted to focus on improving from Melon V1. Specifically, Melon V1 was hard-coded kind of for a particular purpose. So we've been spending a lot of time trying to make the protocol a bit more abstract to be able to handle different kinds of fees, different kinds of policies, like a range of potential price feeds, to be able to integrate more than just DEXs, but also other kinds of DeFi protocols. So to push that work along, we needed to abstract the core protocol a bit. The second thing we've been focusing on is fund deployment. So as a lot of you guys have set up funds probably realize, fund setup right now is like an 8 or 9 step process. And each step kind of had its own contract deployment, which also made things expensive and time consuming. Yeah, and in order to use the latest release of Melon, like if we released a new version, you also needed to shut down your fund and get your investors somehow to come over to a new fund. And so these are all things that we've been focusing on trying to improve the experience of. And so starting with Melon V2, we're really trying to move more towards being more of a lightweight, nimble protocol that's a bit more abstract, unopinionated, and will eventually be able to be used by third parties to build on top of as well. So that we're not just limited to the kinds of functionality that we can think of, but any developer or fund manager would be able to implement their own functionality on top of Melon. So for V2, which you can expect in the release coming this fall or late fall, will be fund deployment. Fund deployment will be way less time and money significantly, because we'll probably be getting fund deployment down to 1 transaction, which is obviously a massive improvement over 8 or 9 steps, getting it down to just 1 transaction. We've optimized the code base for lower gas costs, especially reducing redundancies and things like fees and policies. We've greatly improved the liquidity options in the protocol through additional adapters. So we're going to have Uniswap V2 as an adapter, as well as other DEXs. Also, we'll be integrating with Paraswap, which is going to mean minimal slippage, especially for larger orders when you can spread your order out across an optimal range of exchanges. And we'll also have OTC trading available for even larger needs of deep liquidity. We're also going to be adding DeFi lending. So like I said in Melon V1, we really only support DEXs via our adapters. But now we're going to have any kind of integration into a DeFi protocol is going to be theoretically possible. So we're going to be releasing adapters for compound lending, so including mining the comp token, chai, which is a DAI derivative, and other protocols as well. We're also going to be greatly expanding our asset universe, and this includes both these kinds of DeFi products that I've been talking about, as well as a range of DeFi protocol tokens as well. Our front end is going to be able to actively support funds denominated in other kinds of assets. So right now, all funds created through our front end are denominated in Ether or in WETH, but we're going to be actively supporting USDC and potentially DAI as well. Kind of a less sexy topic. We've done a lot of work on a custom testing framework, which might not seem exciting, but it's super cool and something that we're really we think is a critical part of any DeFi protocol infrastructure because it's critical to security. So we have this custom testing framework now built on top of Builder with much stricter code coverage practices for unit tests, and we're going to have a range of end-to-end tests on running on a fork of mainnet. So actually using mainnet state to make sure all the functionality on Melon and functionality integrating with DeFi protocols works as expected. Yeah, but probably the most exciting thing of all of this that we're going to have in Melon v2 is upgradable funds. So a big pain point, like I said before, if you launched a fund on a previous version of Melon, is you have to shut down your fund and somehow get like investors to come over to a new fund if you want to use new functionality in Melon. But starting with the upcoming release in Melon v2, funds are going to be upgradable, so you'll be able to migrate your funds over to the latest version of Melon and take advantage of all the new kinds of features and adapters and all the different kinds of plugins that we have there. So that's basically the update, and I can take some questions if there are any.
So you should all be able to unmute yourself now, so you can go ask questions.
We can also accumulate questions for the end. If you have any questions, you can just put them in writing and then we can circle back to them at the end of the session.
Perfect. I'll be around at the end as well in case you guys have any more questions.
Actually, Sean, can you take that question now while we unmute the other three speakers for the next session?
Sure, yeah, so the question is, can we delay a chai release since it's not a priority, since the DAI savings rate is currently at 0 for the foreseeable future? Yeah, I mean, you said it right there at the end. We've basically already got it done, so it's already there.
There's another one.
Yeah.
There's another two, I think.
Sure, yeah. So will it be possible to add crypto assets to pools of AMM? So for example, Uniswap and Balancer. Yeah, that's going to be possible as well. And certainly there will be, whether the adapters for those are released along with our Q4 release or whether they're just released subsequently, because since we have a much more abstract architecture now, we'll be able to release adapters potentially on like a different schedule from major releases. So they might be coming more frequently or regularly. But yeah, we will be having adapters for AMMs, for AMM liquidity. Yeah, that's an interesting question. So are we talking early Q4 release or late? I'll let Mona take that one probably. But for the Uniswap v2, since Uniswap v2 will be supported, basically doesn't mean we can use Uniswap v2 as an oracle to be able to increase the asset universe. Yes and no. Yes, that's definitely the direction that we want to go in the future, with opening up, potentially having like a range of price feeds that funds can draw off of to be able to support more assets, including stuff like Uniswap v2. But we won't be having an adapter, or sorry, a price feed for Uniswap v2 in this release.
Yeah, so on the timing, I don't think we want to commit to that. We're just going to say Q4 for now. It really depends on a lot of things. Okay, I think we're going to wrap up the protocol questions. You can keep sending protocol questions and we can circle back to them at the end. But Chris, Ceteris, and Tom, you can unmute yourselves and go ahead with your section now. So this is MIP7.
Hey Mona, it's Tom here. Nice to meet everybody. Mona, would it make sense for us to go through the proposal or just to field questions? I wasn't sure what would be the best route here.
I think it would be great to get a summary. I assume most people have read through the MIP7, but I think it would be great if you guys can give a high level summary and then maybe discuss some of the community feedback and what your thoughts were on that, and then take questions.
Awesome. Okay, cool. Ceteris, Chris, you guys want me to go through the summary real quick? Would that be okay with you guys?
Yeah, that works.
All right, cool. So I'm sure everyone's seen the MIP7 that we all, Ceteris, Chris, and myself posted. Basically, we wanted to find a better way to scale or just link the Melon protocol token to the growth in AUM on the platform versus kind of the gas model that it had with the mint and burn model that was there. So we kind of centered around Melon. It's clear to us that there's demand for a product like Melon, but our motivation is to kind of help address these issues and kind of make more robust kind of Melonomics that are, one, easier to understand, two, scales with AUM on the platform and still keeps costs really low versus traditional fund structures, and also base things in US dollars was a little bit easier to understand. So just a quick overview of the proposal, integrating some comments from the community. We believe the setup fee should be free because it's kind of, it was a spam filter, but gas costs are high enough to deal with spam, and we also want to lower the barriers for people to create funds. We think the 10 bips on funding, which we originally proposed, we could, remove this fee if the community feedback is negative, but, and we're thinking maybe this should be removed, but we're still kind of thinking through this as well. The main change is a 20 bips annual fee on AUM for the managers with no discounts, just to scale the MLN burn with the actual AUM on the platform itself. And then also, we wanted to decrease issuance. We think it's really important that the issuance schedule is deflationary over time to drive more value to the MLN token holders. So we proposed a new schedule that kind of encapsulates this idea, which decreases by 20% per year until 2021, until it hits a minimum cap. And then eventually it'll be a minimum cap so that there is issuance for protocol maintenance in the future. And also there's a way that managers can arbitrage MLN a little bit for a holding period that we think the community kind of liked as well. So just a quick summary, and thanks Chris for putting that summary together as well. But we're happy to answer any questions or go into detail on anything here.
I think it would be interesting if you could summarize, Tom, just some of the pushback some of the pushbacks you got on the community feedback side of things on GitHub. I posted the link if anyone wants to take a quick look while you're talking, but a good summary would be helpful, I think.
Yeah, sure. I guess there was just kind of going through the comments here, seeing what what was the biggest pushback? Some people said they don't believe the fund initiation fee being free will help AUM and it'll lead to like, spammy funds. I don't know if I totally agree with that, just because it's, it's gas intensive. It's, linked to your reputation eventually. And it's not easy to set up. I mean, it's easy to set up a fund, but you still have to, have an intrigue and interest to kind of do this. So I don't know if that would be so fair. Ceteris, Chris, what are you guys thinking on pushback? Do we have anything crazy to talk about?
I think we got a decent amount of pushback on the 10 bips investing for an investor. So that's something that the investing fee didn't really drive a lot of income to the platform. So I think that's something we could look at if we wanted to kind of remove that friction right off the start for, anybody investing. Right when they invest, they kind of see a 10 bip hit. I think that's something that isn't really something we have to keep in, but it does drive a little extra income.
Yeah, that's a good point. It was, it's pretty minimal from like new investments. I think it was below 5 or 10% of total USD to the platform, like 10 years out. So I don't think that would be a huge deal if we got rid of that. Yeah, and then the other thing that the community came back with, which we addressed, was kind of around the arbitrage process. And you highlighted it a few minutes ago in the introduction, just about like the 30-day holding period. And then also we would want to make the arbitrage process, instead of first come, first serve, some sort of subscription process that gives everyone an equal opportunity to take advantage of that. Yeah, that's a good point to get pushback there.
I see a couple of questions on the chat. Just a tip, I think it's helpful for the recording later if you read out the question before you answer it, just so that people have the context. Gotcha. So there's one on, do we see a limitation to the 20 bips fee on AUM? I think we all view the fee as really relatively small, especially since we're getting rid of the fund setup fees and potentially investing in the fund fees. And 20 bips is very, very small compared to what traditional funds charge. Obviously, funds are charging performance management fees on top of this, but given how easy it is to set up a fund on Melon, I don't think every fund will follow a 2 and 20 structure. They can go lower and kind of bait that fee in. So I think 20 bips is low enough. Is there a limitation, I guess, the other way on should it be higher to drive more USD to the platform? It's definitely a conversation to have on what the correct fee is. We think 20 bips is pretty good because it's really low and it could drive, potentially tens of millions of dollars to the platform itself, especially given Melon is a liquid. It's a liquid right now. It would be a pretty strong driver there. So hope that helps on the question there. And there's one on what Sebastian said, spammy funds are not an issue because of filtering. It's an issue it's a question for the front end. That's a really good point. Didn't really think about that. I guess if the front end is more stringent, maybe ask more questions. I'm not totally sure how to optimize that myself, but that could also prevent the spammy funds, and gas fees are pretty high in Ethereum right now. So it's hopefully deterring some spam as well. Yeah, there was also a question on were there any comments worked into the original MIP or was it revised at any point? I don't think there has been a revision at all yet, but I think there are plans for one, right, Tom? Yeah, I don't. We've made a couple of revisions just based on the feedback. But though, if you go to the MIP and you just read through, you can kind of see where our thought process has gone. At a high level, it's basically keep the 20 bips on AUM. The investing fee is up in the air. We originally proposed discount tiers, but that's something we've decided to get rid of just because it would be the fund manager kind of subsidizing everyone in the fund, and there's just a lot of complexities there that the incentives don't really make sense after thinking about it more. But
But yeah, like if you go look at the MIP, it's pretty much like 95% where we're going with this right now.
I think the proposed issuance is also very much a work in progress. That's obviously something that we need to all have a discussion around because it's super important. And I think that's to be said about the MIP proposal in general. We've taken a lot of feedback in, we've kind of had high-level discussions, and it would be great to get more comments, more feedback, so that we can, amend this version and post either a new MIP or amend this MIP, and then get further questions and feedback on the second version.
There's a couple more questions coming through on the chat.
Lost the chat. How do I?
Oh, sorry. I can read them out if you want.
Oh, no, I got it.
Someone said why not move to a no fee structure, kind of just referencing governance tokens these days until there's enough traction. I don't know. I mean, I think I think this change in itself is going to take a lot of effort from the development team, because doing an AUM type fee is not as simple as, say, just collecting on an upfront like it is right now, and it goes to the engine. So, and the other thing is a lot of these governance tokens are probably voting in fees soon anyway. So, and a lot of these are also new protocols that are doing that. And they're lending borrowing protocols. So there's a lot of differences there versus the way Melon kind of works. I don't think that it would make sense personally to kind of go extreme to zero and then wait, because that the other thing, people, I don't think that'll be good for the token, and people who want to set up funds, a lot of them are probably looking to hold the token as well, right? So that's kind of my thought on having a zero fee governance token.
Yeah, I don't
I mean,
know.
so I was just gonna say, like, one interesting thing with the Melon token is that it does work in the way that it gets cash flows to it, but it also has utility in the fact that fund managers can take advantage of this arbitrage, right? So if there's like, what I'm just thinking about this in the future, like if Melon grows to, 100 million under management or something like that, and fund managers are able to just borrow Melon to complete the arbitrage, then you could kind of see a market develop there once Melon starts getting listed on like Compound, Aave, and these kind of protocols, where if we have this minimum holding period to take advantage of the arbitrage, and especially with, Aave coming out with credit delegation and things like that, you could see a scenario where managers decide, hey, I'm not going to hold Melon, I'm going to borrow it and pay the interest on this, and then I'm going to take advantage of this arbitrage at the end of every month, right? And that would just kind of be another interesting use case kind of for the token on an investor side. Instead of just holding it, you could potentially, lend it out, and for managers, if they don't want to lock up the capital just to do this arbitrage process, right?
I actually have a question. I wondered if there was one comment on the GitHub, which I thought was very interesting. You touched on it very slightly earlier about some people having an issue with fee on investment, but there was a follow-on comment afterwards about scrapping that potentially and then making a much bigger fee on redemption to incentivize people to not game the system and to, kind of hold longer term investments. And I guess this is more of an open question, not just, I think we can start with you guys and then open it up a bit, but I'm interested generally on what people think of having no fee on investment, but higher fee on redemption, which by the way, has no fee on it at the moment.
I can start with this question if ever, but I don't know. I'm very strongly against having some sort of redemption fee because I feel like no investor should feel trapped or locked with a fund that's underperforming. And this goes very much for my belief towards funds in the real world. I think the best funds will thrive because of their performance, and they will be handsomely rewarded through their management and performance fee. I don't think you need to have a redemption fee on there at all. You know, I think it's going to be survival of the fittest. The best funds will survive, and the ones that don't perform won't. And I don't think investors should be punished or pay a fee because the fund is underperforming and they want to, you know, remove their capital before a certain period of time or before the lockup period is kind of over. That's just my point of view.
Yeah, I kind of agree with you there too. I mean, I think at the basic level, you know, what you want the token to be linked to assets under management, right? So the simplest way might just be to have all of it based on AUM, right? And then it's simple for everyone to understand. There's no extra complexities on top of it. So like, I don't know if 20 bips is the right number. And if we were to get rid of like a 10 bip investing fee and have no redemption fee and all of that, maybe 20 bips isn't the right number. I don't know. But I think adding extra fees on top, and I agree with Chris's point, like, I don't know if you want to charge someone for selling. They're already gonna have to pay gas fees, right? There's other things that go along with that. So I don't know if you want to, kind of seems like you're kind of forcing people to be locked in a sense.
Maybe not forcing, but I mean,
yeah, I mean, it's not a lot, right? It's not like we're charging an arm and a leg, even if it's like 5-10 bips. But I just wonder if we want to charge people 10 bips on exit, why don't we just bump up the AUM fee by like 1 or 2 basis points, right? Whatever it works out to, just to kind of keep it simple.
Okay. Yeah, I mean, I think generally speaking, nobody in the feedback seemed to have a problem with the 20 bips fee, to be fair. Even users of the protocol, especially users in the protocol, which is something that I'm encouraging. The main pushback seemed to be on investment. And the second pushback that I noticed on the MIP7, which was also from managers, not from investors, was that they would like to see long-term incentives by their investors by having a higher redemption fee. But I suppose, I mean, your point is very valid. If the fund is performing badly, why should you have to pay a fee on exits? You know, it's a tricky one, but it's also like if you're betting on the manager longer term, you can't just abandon. You shouldn't just abandon every time there's a drawdown. So it's
Mona. The one other thing that's interesting is that the investing in the fund fee versus redemption fee. Since the investing in the fund fee is all front loaded and redemptions may, you know, theoretically never happen. Obviously they will over time, but you get a lot more money to the protocol through the investing in the fee versus the redemption one. But I mean, if you were to take both out and have no investing in the fund fee, like 10 years out in our model for year 10, instead of having 50 million in fees, you have 40. So it's not like a huge difference. I'm just playing out the model now. So, I mean, if it's a hurdle, it wouldn't really negatively impact fees to the platform. And honestly, like if you don't have the investing in the fund fee, you would probably drive up AUM higher anyway. So the AUM fee would probably just capture it at that point.
okay, interesting. There was also a point that I thought was interesting around ETF products, which traditionally do not have high fees at all, and whether it's fair to, I mean, how can you aim to be competitive with those kind of products with the 20 bips fee? And I wonder what the group thoughts were on that as well.
Yeah, that's a good question. To be honest, I'm not too sure. I guess we designed this in like an active management type perspective, and more the indexes would be filled by something like a token set or something else. I guess there would have to be something in there. I guess to enable ETFs to be competitive here, there would have to be a fee break on the AUM somewhere.
I think, yeah, maybe maybe if people want to make ETF type products, like maybe it has to be a separate breakout of the platform. And I'm obviously thinking like further down the line here, but you know, you could have, I don't know, like you could have, if someone's designated as an active manager and they hit certain criteria, right? Whereas if somebody just wants to make an ETF that is auto rebalancing, maybe they go down another stream. I'm not sure, but it's a good point. Like it's, you know, you have some ETFs. Let's keep in mind though that as much as some ETFs like VT are basically free, you know, ARC has a 75 bip fee, I think. Any active ETF normally at least has 50 to 75. You know, the really cheap ones are basically just broad index products. And I'm not sure if that's really a short-term concern right now, maybe something that comes up in the future, but
maybe
it's something to keep in mind.
Maybe one approach, just off the top of my head, could be, instead of having a flat fee, a percentage of the management fee chosen by the manager, which is obviously much harder to model, obviously.
I think the difficulties with that is that you probably just have people jacking up the performance fee and then having like basically no management fee. And then if you have a year where you have no gains, then you're not going to pay anything to the platform, right?
Yeah. True.
Overall, it's a zero-sum game. So if some people are losing money, other people are making money.
Not if crypto goes down. Not if we have 2018.
That's fair.
Let's hope not.
Hopefully don't have that.
So there are a couple of other questions on the chat, which I'll read out. Where did we get to? When is the council planning on voting on it? So the council have prepared some initial thoughts. We're in the process of writing up a summary of our thoughts, and we'll publish them probably in the next few days. I think based on that, there will probably be some revisions made by the group, and then we'll probably aim to have a vote on it in the coming few weeks. But I think the bigger issue is the implementation of it has to be discussed, and the timing around that has to be discussed, and who actually implements it has to be discussed. And so, you know, there's a ideal scenario, and there's like, you know, what's technically possible and not going to add too much complexity. So we'll aim to vote on that, you know, probably in the next couple of months when all the revisions are through. One big, you know, Janos kind of purposefully kind of emphasized the fact that we're looking to build the user representation on the Melon Council now. But a really big reason for not voting on the proposal right now is because we feel it's really important to have user representatives on the council buying into whatever the proposal is before it's voted on. So that's why we're making a really big push now for user representatives to nominate themselves for the council. So thanks to everyone who has applied, and for anyone who's thinking of applying but hasn't applied, there is a blog post on Medium talking about the criteria that are necessary and the process of applying, which is very simple, but just so that you have it, I'll link it in here in the chat soon. Okay, I just noticed the time. So we're 10 minutes to go until the top of the hour. So I think we can jump into all the questions now. You know, feel free to continue sending MIP7 questions. But the next question I see is, will autonomous be integrated in Melon V2? No, probably not in V2, but autonomous, you know, we are close to the team and we're talking to them, and if it makes sense, we'll, when they have something that works with Melon, we'll introduce it. But we could also have an autonomous-like solution at a future date as well. And then I think there were some protocol issues, which I'll throw over to Sean. When integration with Diversify, so we can leverage their Starkware tech, could it be possible for fund managers? Do you want to take that one, Sean?
Yeah, sure. So I think definitely not something for V2, but something that we're interested in. I'll just forgot my camera privacy cover was on there. But something for future versions of Melon that we'd really like to explore is how to integrate these layer 2 leveraging solutions like Diversify, for example, and rollups to reduce the gas cost of trading and such, especially, and take advantage of the liquidity that's in those rollups. There's some challenges involved, being that settlement there's not instant finality, like instant settlement, like there is for like AMMs, for example. So yeah, we'll be trying to tackle this issue and find a way to integrate rollups in 2021.
Maybe just to go back to the MIP7 subject, I really feel like that we are super early, and I'm not sure it's the right time to discuss fees overall. I don't know. I'm not really sure. Like, what we should be looking for is adoption, is to bring people to use the protocol, is to have as many people as possible, as many investors as possible, as many managers as possible. But trying to put fees or to define fees at this stage is probably a little bit too early. Like, what is the end game for Melon? What is the long-term end game for Melon? And what is the right time to start discussing fees?
Yeah, it's a good question. I could jump in there. Directionally, I definitely agree, right? Like, you don't want to overburden early projects with fees, but I think what's different about Melon is that this is for like professional people building real funds over the long term. It's not really just like let me hop on synthetics and do a trade, or let me hop on compound and yield farm or something. I think it's more professional, more formal, more multi-year. The other thing I'd point to is that the fees, we're actually trying to reduce the friction by getting rid of any onboarding fees. Getting rid of the investment fees would also make it even easier for retail to come on. And the 20 bips AUM fee, I think, is so low that people won't even realize it. But 2 is high enough that it will actually help the long-term token econ of Melon, so that people who want to hold this token for the long term understand that there's actually a value flow here, which helps everybody, because then Melon and Mona and everybody here has money to help develop and grow the platform. And people that may want to buy the Melon token, don't have to wait 3-4 years for some vague ideas to be figured out before they know that there's a real value flow and there's real econ here. So I think it's low, just to summarize, for retail, and I don't think it's a barrier. And to be honest, I don't even think they'd really notice. And 2, I think the burn really helps the token price and really helps large investors that would want to get involved with this over the long term and see the token price, stabilize or go up. Obviously not investment advice from my end, but just my thoughts.
I think it's also important to note that we are the protocol currently charges fees at fund setup, and the proposal is moving towards a 0 fund fee setup, which is actually removing friction. So if anything, it's much bigger for user adoption and growth, and aligning essentially the protocol's growth with the manager's growth, or the protocol's value with the manager's success, which I actually think is a much stronger alignment of interest. And The other reason, Marwan, to your comment on why fees now, is because we are all, I think, in the business of token economy, and in order to have token economy that works, we need to make sure that all stakeholders are aligned. And in order to align all stakeholders, that there has to be a tokenomics that is accruing value to the network aligned with growth. So yes, we could push it back. For example, we could say we take the vote end of the year and then we implement it when usage hits X or something. I can see the logic in that. But I actually just want to kind of push back a bit on your point around the friction, because I think that if anything, this removes friction from users because the setup fee goes completely.
Actually, I was not talking about only the 20 bips fees, like all fees. Like at some point when you add fees, you're adding friction. So that's what I was really thinking of. Like if you're focusing on growth, you don't want to add fees or anything, because you don't know exactly how much people are ready to pay already. So once you figure out who are the end users in a large population, who are the investors, etc., you can start seeing which kind of fees you can apply. And for me, it's too early right now. Like, I don't know, we probably need to have something around 10,000 funds, 100 or 200,000 investors. And from that point, it would make sense to start seeing what kind of fees we can apply to whom, what structure, etc., etc.
I think it's a really fair point that a lot of people seem to be philosophically aligned with in terms of that idea, but ultimately I suppose the fees are still very low in this proposal, and lower than they are now in some ways. And so I think if you compare that to many other protocols in the space, traditional fees, management fees, it's actually there's not much difference here between zero fee and 20 basis points per year. So I think it's still probably a pretty sound proposal, which also gives token holders a long-term view on where this protocol can go and where value will accrue, which is the important thing, even if it might not be collecting many fees to start with.
Let me put it this way. Let's say people are really willing to pay 1.5% per year in order to access Melon, and we start by 20 bips. Okay, it's going to be really hard to move the price up. Like, we don't know what people are ready to pay yet, even though 20 bips is really low. We don't know yet how much people are willing to pay. We don't know what fee structure makes sense, and we're going to start testing on fees while the focus should be growth.
Yeah, I think, sorry, I'm just looking at the chat because I think there's more comments being made, but I think the goal, the goal unanimously is growth of the network. So we all agree on that. But I think, maybe we can continue this chat on GitHub. I think that we can kind of probably revive the conversation there. But I think that the important thing is also to give some kind of integrity to the token economics and to the stakeholders in the ecosystem, because giving some kind of visibility or giving no visibility on that kind of breaks it all. And the whole system was designed around the three ecosystem stakeholders, which are the developers and maintainers, the users, and the token holders. And so if we start messing with that, then there's other implications that have to be carefully thought out. And I know that the hype is all liquidity mining, and I'm not against that at all. I saw some proposals were already made in the chat, which maybe we should also bring into the MIP7. But basically, liquidity mining works now, but at the end of the day, there will come a time where people want to see some sound fundamentals, and at that point, the systems that survive will be the systems that have, I think at least, the systems that will survive will be the ones that have sound tokenomics around them. but yeah, there's definitely some thought that needs to go into growth versus like, or when do you introduce the fees and how do you introduce the fees? And probably we can take that conversation offline. I see like a lot of comments coming through. If anyone wants to jump in with a question, I think it's better to unmute because the chat's moving so fast I can't really follow.
I just had one point to make regarding the fee structure. I think we always have to remember that, you know, in the real world, setting up a fund is a very burdensome and expensive process. And, you know, you have to deal with compliance, administration, taxes, custodians. I mean, that all adds up. And I mean, depending on where you're setting up a fund, you know, you can easily pay, you know, hundreds of thousands of dollars, if not millions in Switzerland, just to set up the fund. And here, you know, you have Melon that allows you to do that for $30. So I think 20 bits on AUM is really nothing at all. It's peanuts, right? I think no one's going to notice it. And if anything, I think it's a lot easier to increase the price. So I think the more features, the more features that are added to Melon, the more the Melon protocol will be able to argue for, you know, higher basis points on AUM, because it's providing a service that is extremely cheap compared to the real world cost. I think that's important to always kind of remember when you look at, you know, fees. And I think people will not mind paying these fees. You know, if they do a little bit of research, they'll realize, you know, how beneficial Melon can be and how, you know, attractive it is compared to other solutions.
Yeah, I have to second that, just in the sense that, you know, there was a very good comment made on the chat just now that people pay 20 bips for a single Kraken transaction, 50 bips for a Coinbase transaction. In the grand scheme of things, 20 bips, you know, this is not just a transaction. This is a fully automated fund administration and operational platform protocol that automates all the headaches that managers have, pretty much. And in the traditional world, that would cost you, you know, starting at 75 to 100 grand a year. So 20 bips on AUM, and that would totally price out funds below a certain size, probably around the 10, 20 million or even larger mark. So the goal really is to, I think, grow, empower the long tail and grow with the long tail of asset managers. And yeah, and maybe we start the fee too low, but I'm not sure they'll, I mean, I think we always aim to be low enough, as low as we can be, whilst keeping, you know, fees accruing value and keeping the integrity of the network. The goal isn't to go as high as we can, but the goal is to stay as low as we can in terms of fees so that we can empower the majority of managers while still maintaining the integrity of the network. I just want to read a couple more comments before we close from the chat that I thought were interesting, and moving on from MIP7 a bit, because we can continue this conversation in the GitHub channel. The link is posted for anyone who hasn't seen it. But there were other suggestions made, which I think are really interesting. And actually, there have been discussions around them a bit behind the scenes, but things about liquidity mining or performance mining. We've heard, you know, how can we kind of help drive? I want to also touch on it, like, but this doesn't have to be instead of fees. It could also be, you know, complementary to the fees. How else, like, what other metrics are we looking at for incentivizing growth? Sorry, Munir, did you say something?
Sorry, I thought I was muted.
Oh, no worries. No worries. And also, yeah, a comment from, so yes, there was Simone and I don't know who A is. But yeah, and then some comments about fee structure is more to show a self-sufficient system. For example, Kuiper Network have done a great job at this and have been growing long-term. I think it's very hard to get the right pricing point, but I think that the goal here is to get as low as we can whilst keeping the integrity of the network and being able to push through growth as much as possible. But we are definitely open to hearing everyone's views on this. I don't even think that we necessarily agree on everything within the council, but what is really, really, really key and really important is that we get some user representation on the council and user feedback from that on this proposal, because I think taking a vote on it before having user representation wouldn't be fair, and I think that we should aim to have that. Someone asked for some color on Mel AI. That was planned to be unveiled today. Unfortunately, Carol is unable to make it for personal reasons, so we'll postpone that to the next community call most likely. We also will get an update because we ran out of time, but we'll get an update from Gorilla Funds next time. He was prepared to jump in at the last minute today, but we unfortunately ran out of time. So there's been some great progress from Jakob Sievers. And if you haven't been following Gorilla Funds, we have a sub channel in Discord on that project. And we've got a few more projects in the pipeline who will hopefully be building on Melon soon, which we will announce shortly. Not quite ready to announce, but I'm sure when we accumulate a few more of those announcements, we'll be ready to do another community call sooner than later. So yeah, I mean, if anyone wants to continue the discussion, GitHub for MIP7, Telegram for anything Melon related, team@meloncouncil.io for user representative applications for the Melon Council, and Discord for, you know, anything else as well. So with that, I think we can probably wrap up for today. Thanks everyone for being here and for your continuous support. And yeah, look forward to the next one.
All right. Thank you, Mona.
Thanks, guys.
Thanks, everyone.